Hello and welcome to your Daily Five. This is Erin Swenlin from DecisionPoint.com, and I'm going to show you the five charts that I think you need to look at going into next week, being that it is Friday. So let's go ahead and we'll just get right started here. Decision Point is currently running a super secret sale. I'm not advertising it except to people who follow us at Decision Point. All you have to do is buy one subscription of any of our subscriptions, and I will add 1 month free to your subscription. You don't need to do any coupon codes, just subscribe, and I will go in and add that free month for you. We are going to be raising rates in January, so this is a great time for you to come in and lock in our current low rates. All right, let's go ahead and start with the 1-year daily of the SPY. You can't do anything until you look at this chart, that's for sure. So really very interesting activity going on right now. It's been not a great week for the market, obviously. And we can see that we had a breakdown right here coming in on those last two declines that we had on Tuesday and Wednesday. And it is holding above the 390 level. I mean, this horizontal support is holding pretty strongly. And that 50-day EMA has managed to get up in there as support as well. But we've seen a lot of deterioration on our charts. And the RSI may look okay. Stochastics are trying to tick up just slightly today, but they have spent most of their time in decline this week. You can also see that we had a new PMO crossover sell signal. So these aren't the only signs of internal weakness. There are others. You can also see that the VIX on our inverted scale is traveling beneath its moving average. That's also a sign of internal weakness. You can see that we did have that rally yesterday, but it didn't really come on lots of volume. It was fairly low. So that gave us a little less confidence in what happened yesterday. Certainly we are on the upside currently this Friday, this morning while I am recording this, but I don't think that we're going to be enjoying much more rally. Here's some interesting news that we got from our Climax analysis. This is something that we are the only ones who do at Decision Point. And what we do is we look for climactic behavior in the advanced declines, volume and breadth. And then we also look at the total volume as well as volume ratios. And the volume ratios are our first trigger as to whether we have a climax event. And you can see that we did have a climax event on Monday. We had very much outside the normal range for these indicators. It was confirmed with some decent volume, not a great amount of volume, but because it came on the beginning of this decline, we called it a downside initiation. So the initiation climax did result in some downside the following day, but then we ended up with climactic readings on our up-down volume ratios right here. So it didn't work on the NYSE, but we did get it on the SPY. So we called that particular climax an exhaustion climax. So the initiation got us 2 days of decline, and now the exhaustion climax is getting us the area of churn and consolidation. So this is what will often happen when you're starting to lose a longer term trend. When you get these climaxes to the downside, it's going to turn into not an upside move. It's generally going to turn into some sideways consolidation or churn at best, because a lot of times these downside exhaustions don't really resolve to the upside. They'll resolve to the downside anyway. So right now it's doing what we expect, and that is some consolidation currently. Let's look at our Swenlin trading oscillators and the intermediate term breadth momentum and intermediate term volume momentum indicators. These are primary short-term and long-term, intermediate term indicators. And what we watch for is direction, but we also watch for negative divergences. So we had a negative divergence back here. You can see it never quite turned into a decline, but these negative divergences are persisting right here. You can see the declines from this top to this top. So this is a problem, and it also is telling us to look for some downside movement. On the bright side, you know, the STOs have been declining even through that move we had to the upside. So on the one hand, they are declining. On the other, they are getting oversold, and they managed to get oversold without a huge breakdown. I mean, certainly this wasn't enjoyable experiencing this last decline, but in general, it's not turned into a big declining trend. So we think it will, but the fact that these are getting oversold may give us a little bit of hope there that this will turn back up into, you know, a continuation of this rally. The problem is our intermediate term indicators are in decline, and they certainly are saying, no way, we're not going to see this intermediate term reversal, at least not yet, because they continue to be in decline. On the bright side, no negative divergences with them, but still seeing them drop and still being really overbought at this point is a real problem for the intermediate term. So short term, maybe we can eke out a little bit of upside if these indicators turn back up. But in the intermediate term, these indicators tell me it's just not going to last. Let's look at the Golden Cross Index and the Silver Cross Index. These are exclusive indicators to Decision Point and StockCharts.com. Let's see what they're telling us right now. This is what I call our bias chart. It includes the Silver Cross Index and the Golden Cross Index, as well as the percent of stocks above their 20, 50, and 200-day EMAs. So what I want to talk about here is what the heck is a Silver Cross Index and a Golden Cross Index. Golden Crosses are typically the 50-day EMA crossing above the 200-day EMA. I don't have an example here because the 50-day remains above its, or I mean below its 200-day EMA all of this year so far. But that is what we do, is we count up how many stocks within the S&P have golden crosses, how many of them have a 50 above their 200. And right now, less than half of them are in that situation. Silver Cross, that is when you get a 20-day EMA crossing above the 50-day EMA. So this index tells us how many stocks within the S&P have a 20-day EMA above their 50-day EMA. So right now, currently 80% do. We did see a topping off on this indicator in very overbought territory, and that is another sign of internal weakness. I do note that it did flatten out just a little bit yesterday, but overall it is still in decline. And if we get that negative crossover on this Silver Cross Index, that's going to be definitely a sign that we're going to get a more lengthy decline should we start to see a little bit more follow through on this original decline earlier this week. Now, when we look at how many stocks are above their 20 and 50-day EMAs, we can see, you know, a decent amount of them. But the big problem is these percentages are lower than the Silver Cross percentage. That means that we're probably not going to see more Silver Crosses. If anything, we're going to start losing them because we don't have as many with price above those 20 and 50-day EMAs. They're starting to fade out. Now, the Golden Cross Index is still moving higher, and you could see it did tick up just a little bit yesterday. But and we have percentages above 50 and 200s that are definitely above the Golden Cross. So in the longer term, there is still a bullish bias. This does not mean by any stretch of the imagination that the bear market is over, but it does give us a little bit of hope out there for the longer term that we could get this rising trend to really catch hold and move us a bit higher. But we're not feeling so good about what's going on. We think that you should be honoring those stops, playing it safe, or as I am the process of doing myself, I only have 10% exposure to the market currently. I always let my subscribers know what my exposure is. That is what it is. So I'm not really excited about expanding exposure in a market that looks this weak. However, it is time to maybe start considering short positions. And one of the positions that I am considering right now for my portfolio is the inverse of the energy ETF. Now, I think technology is on its way down. I think a lot of the aggressive sectors are on their way down, but energy is a clear loser right now. And so I feel like my risk level is a little bit less than if I get into a short or an inverse on indexes or other sectors. So this is the one I'm looking at. This is the one I like. And here is why. If you look at the energy sector chart, and I did not bring it because basically it's the inverse of this inverse energy ETF. This is a what we call leveraged or juiced ETF. So this is a 2 times. So if the energy sector goes down 1%, you will get 2% to the upside on this particular ETF. We have a rounded bottom, cup-shaped bottom here, meaning we have a big, giant, rounded top on the energy sector, and that looks very bullish for this particular ETF. The RSI is positive. The PMO is on its way above the 0 line. Stochastics are starting to oscillate above 80, and you can see the relative strength of this particular ETF against the SPY is gaining strength. So if you're going to be somewhere on the short side, I kind of prefer this particular ETF. I did present it to my subscribers on Wednesday. Decision Point Diamonds, I give you stock picks. And on Wednesday, it is ETF day. So if you're an ETF trader and you were thinking maybe you didn't want Decision Point Diamonds, hey, every week you're going to get 3 ETF picks. And then Thursdays are reader requests. So if you have something in your portfolio that you're really struggling with, you can always request that for me to look at on Thursdays. So go on in there. As I said, we're running that special buy 1 month, get 1 free. And all you have to do, no coupons, just go ahead and subscribe, any of them. DP Alert is going to give you what I just showed you at the beginning of this presentation, and Decision Point Diamonds are going to give you what you saw at the very end of this presentation. And of course, we would love for you to get them both. But in any case, any of those 2 or both, you're going to get that free month if you subscribe by the end of this week, which would be, wow, on Sunday, which is 2 days from now. But I'll probably extend this one out a few more days just because I know that a lot of you are only now watching this and it is the weekend and it is not on the market day. So again, go check us out, decisionpoint.com. This has been your Daily 5, and thank you so much for watching.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.